What is going on YouTube? It's Sankey. We're back with another one. Alright guys, so I know we're coming out of a tough week in the stock market and I know your portfolios are probably seeing a lot of red right now, but guys, don't worry because this was one of the worst weeks we've had in the stock market since the middle of October. And this is the stock market. This is what happens. Sometimes you have periods of highs, sometimes you have periods of lows. But I'll tell you guys something. The magnitude of your success in the stock market is somewhat determined on how you take full advantage of weeks like we've just had in the stock market. Now, over at the Patreon, I've got those guys buying the dips and some of the best plays in the stock market. So therefore, I want to put some plays on your radar to ensure that you guys take full advantage of them next week. Now, before I kick things off, I'm going to need you guys to hit that like button for me. And if you're new, hit that subscribe button, join the journey. Now, the time has come. Let's jump into our first one. Up on screen, that's Beem Global, that's ticker symbol BEEM. Now this is an EV charging play and they do things a bit differently. Now I like this play because there's amazing rollout potential with them because their EV chargers are completely charged by solar and they're self-sufficient. So what I mean by this is there's no need for any drilling, no construction or no connection to the grid. They're just placed where they need to be and they're good to go. Alright guys, let's take a quick look at that share price, see what's been going on. So as you can see, over the last couple of months, there's been some strong investor interest and excitement around this play, driving that stock right up to that $75 mark. Now since then, that stock has been trending downwards, closer and closer towards our strike price. Now there's one price movement I wanted to highlight for you guys, so follow me on screen. So as you can see, when that stock hit that $75 mark at the end of last year, it dropped sharply back down to $55. What followed after was a rebound in that stock price right up to $71. And guys, I like to see that in these plays, that strong rebound potential, because it shows you that investor conviction behind the stock exists. So all it takes is a good catalyst to come along, push that Beem share price back up, and they'll be testing their all-time highs in no time. Now, amidst this week's market volatility, Beem did come out and release their Q4 deliveries and they were a record for the company. They came out and delivered 33 of their EV ARC systems. Now, this is a fantastic result for the company and I do see them expanding and growing as we go through this year. Remember, there's a lot of governments who are now going to be switching to EV and there's going to be a lot of demand for EV charging systems as a result. Now Beem, like I said, they offer that potential to roll out the charging systems as fast as possible. So this is ideal to get quick setup. Now, as well as charging systems for cars, we know that Beem are also working on charging systems for drones through their UAV ARC, and they've received patent approval for this. And this could be game changing for the drone industry, and we know that this could benefit the drones massively because it could increase their length of flight, and this will benefit our plays such as Alpine 4 and UAVs. And this could act as a good catalyst to push that stock price up this year. Other catalysts I want to put on your radar include increased partnerships with government, private companies to roll out their EV charging systems. In addition to that, also we are waiting for a good set of financials. Now, if they're released, we could see that share price test their all-time highs again. Guys, let's talk strike price on our Beem Global play. Set that strike price at $55. They're trending down. If you catch them under $55, do consider grabbing this one, adding them to your portfolio. It's a good way to diversify your EV plays. Up on screen, that's Lovesac, ticker symbol OOVE. Now, this is one of our channel plays I believe will double in price. This is a fast growth sofa retailer, but their USP is that their sofas are modular. That means that you can arrange the sofas however you like to fit the space in your home. Now, I think this is a game-changing business with a lot of fundamentals that work in their favor. Now let's do a check on that stock price action, so follow along with me. On the 3-month chart, nice solid upward trend in that stock price. On the 1 month, the same thing applies. The 1 week, they're flat, and on the day, they're up 2%. Now I want you guys to recognize that this is a great result from this play, because if you compare them to an S&P 500 ETF, you will see that that is down on the week 3%, and on the day, that's down 2%. And here we have it, our Lovesac play, even through market volatility, is outperforming. There's a couple more things with this play that I want to make sure is on your radar. Now they're forecasting very good revenue growth numbers from over 200 million currently to over 400 million in 2024. Not only that, they're operating with lower overhead costs. This is because they're using the most of their e-commerce platform. And in doing so, they don't have to sell through hundreds of showrooms, which would just eat into their margins and their profitability. Now they're forecasting 2020 to be a profitable year, which is 2 years ahead of Wall Street estimates. So guys, this play is set for very good things. And that is why I do believe this play is going to double. Not only that, they appeal strongly to millennials. You guys know I like those businesses that appeal to those millennials because I do think that is where a lot of money is for them to capture. Now you guys know I introduced you guys to the Hims and Hers play, the telemedicine play. Again, that play appeals to millennials also. Now you guys know we got to do a check on their valuation. Currently their market cap to sales is 3 times. Guys, this is a good number and it looks like a good entry point to jump into this one, because when they do post good financials and they do show that growth in that revenue, guys, there's a lot more room for this stock price to run up. Alright guys, so going into next week is January deliveries reporting time for a lot of our EV companies. So I want to make sure there's 3 EV plays that are on your radar. Up first is our play NIO. Now we should expect NIO's January numbers anytime from Monday. So if we talk about the charts, as you can see, the catalyst that pushed that NIO stock price past $60 was NIO Day. Now since then, that stock has come back down and it's tested that support line around the $56, $57 mark. That's why I say to you guys, if you can catch NIO at $56, load up on this play. Now guys, it's only a matter of time before NIO deliver those January numbers. What are we looking out for? We know that in December, NIO did 7,000 deliveries. So we're looking for a good increase on that. Anything from 5 to 10% upwards is good. So we're on the lookout for around 7,500 vehicles or more. And that should please the investors. And if it does please the investors, we're going to see that stock price increase and pass that $60 resistance line that we're currently seeing right now. Now you have to remember that NIO is working through a very strong backlog of orders, so it shouldn't be hard for them to hit that 7,500 delivery mark. Now guys, as I've said, we are slowly approaching that $100 mark for that NIO stock price by the end of this year. Up next is BYD. Now this is another Chinese EV play backed by Warren Buffett. Let's talk about the charts. So as you can see on the 3-month, they're showing some good upwards momentum. Let's zoom into that 1-month chart. So they've come down from that $70 mark and they've tested that $60 resistance line several times. Right now this stock is trading at $60, so it's looking like a good time to enter before the next catalyst comes along, and that could very well be their January delivery numbers, and that sends that stock price right up to that $70 mark again. Now one of the things I like about BYD is that they're under the radar. They're given a fraction of the press compared to other EV plays. So this gives us good opportunity as investors to jump in on this one. Now I'm going to put a couple of numbers on your radar. In their December deliveries, they performed well, 28,000, right? So they do big volumes compared to the other Chinese EV plays. And this was an increase of over 100% year on year and an increase of almost 10% month on month. Next up, we have Tesla. Now we're finally getting the pullback that we all wanted in this price. So they've dropped below $800. You guys know I did a full breakdown on the Tesla result, and what stood out to me is they are expecting to grow 50% annually for the next couple of years. So guys, this is some big delivery numbers that we should be expecting from this play. You guys know that Tesla has several arms to their business. It's not just the cars. They've got their batteries, they've got that potential insurance arm, they've got the potential rollout of their robo-taxi system as well. So this is definitely one to keep on your radar. This is a long-term play. Remember guys, we call those wealth builders over here. Alright guys, if you've been rocking with the channel, you know what time it is. This question comes from Ferris. He says, what's my thoughts for the coming week in the stock market? I've been buying the dips in the stock market, but the prices keep falling, so I'm ending up in the red almost immediately. In my opinion, how long do you think we'll have to stick out this market volatility? Now I know for a lot of you locked into the channel, this is your first year in the stock market, so this current volatility you've seen this week can be scary. But what you guys must understand is the stock market can be a roller coaster. You're going to get the boom and the bust. Also got to remember that this is the S&P 500's worst week since October. And if we look at global markets as well, FTSE down 1.8%. Over in Europe, the stock 600 down 1.9%. So this is a global effect on the stock market. And a lot of us have seen our portfolios come down thousands of dollars. So if your portfolios are down, you're not alone. You're in good company with the rest of us. Now, some are worried this might be a correction and not volatility. But guys, I do just think this is volatility sparked off by the events that happened this week. Now guys, if we rewind time back to February, March, when the stock market came down due to the pandemic, we're talking 35%, so significantly. If you guys had stayed true to the strategy and invested into the high growth plays when that happened, your portfolios would be looking great now because there was a very strong rebound in a lot of those plays. Now, another important point is I don't want you guys panic selling right now. I know some of your positions have come down heavy, but guys, just exercise some patience. That's one of the key traits that you can have as an investor that's going to take you through to success. Now, with the amount of liquidity that these big funds have and their constant search for high yielding assets, I do think you're going to see a strong rebound in the stock market. So it's nothing to worry about. So you guys just stay true to the blueprint, invest in these dips, grab yourself some bargains in the stock market. Your future self is going to thank you. And as I always say, fortune favors the brave in the stock market. Now guys, in terms of the strategy for buying these dips, what I would say is grab yourself small portions each time. Don't go all in. Grab yourself a small bit And then what you can do is you can wait a few days, you can wait a week, see where that stock price is at. If it's dropped a bit more, you can grab yourself some more and you can build up your position that way. Now guys, remember, this is not just for any plays, these are for the high growth plays that I give you over here on this channel. That is where revenue is growing, margins improving, they're looking at international expansion, acquisitions. These are the kind of plays that you want to be buying at this time. And guys, do remember we're all in this together and we will be hitting success in the stock market this year. So as I always say, thanks for tuning in. Guys, do drop me a like, a comment, and if you're new, hit that subscribe button, join the journey, and I'll catch you on the next one.